It's great to hear your voice, Pedro. So this was NFP was a bit of a surprise to the upside. I don't think anything's going to give Jay cover from the president about lowering rates. What are your expectations now that we have this number and you saw some decent inflation numbers to what's Powell going to say in the presser that you don't go to anymore?
What's he gonna say in the presser? Well, he's gonna try not to make any news at all.
Yeah,
Uh, and I think this reinforces their propensity to remain on hold. They almost have they're almost pre-committing to being late to the party this time, almost in the same way that they were to hiking rates, ironically, in the
yeah,
sense that they want to make sure that inflation expectations are well anchored because we're coming from a place of high inflation as this tariff shock hits. So that's a major concern as to whether, inflation might become entrenched from this shock. And so their tendency is to wait, really, really wait for the hard economic data to deteriorate, meaning the employment and growth data, before they act. Now, we did get a negative GDP print yesterday, but there
yeah.
are different ways to slice that number. And so I think that, it would be hard for us to see. We definitely don't have any reason, they don't see any reason to cut next week. And it's hard for them to get enough evidence by June even for them to have that. So we're looking really at the second half of the year for them to have any kind of sense of direction. And I'd point you even to, there was a market moving comment by Beth Hammock about the possibility of a June move. Um, but just to emphasize, her media team like really pushed back on the idea that she was talking about a June move, and noted that she was actually trying to talk about the possibility that they could go in either direction once they have clarity. So I think markets are counting on
Okay.
rate cuts, but some Fed officials are still not even sure which way they're going to go.
Well, have you ever seen a time like this?
No, I certainly have not. I think one of the
Yeah,
things that, I was actually on Wall Street, uh, you know, visiting New York, meaning, because I'm based in DC, and I was in 2008 back during the financial crisis, and I happened to be visiting some of our subscribers in sort of the worst days of the volatility, kind of the week after so-called Liberation Day.
yeah,
And it was eerily reminiscent of 2008. And one of the curious things that struck me was that back in the global financial crisis, you had, a private sector crisis that, while we didn't know how it was going to get resolved, you kind of knew where to run. People knew that they could run to the bosom and comfort of the US government and US treasuries, and that ultimately the Fed and the US government would figure a way out of things. But now that the crisis seems to be coming from the US government itself, there's
yeah.
a sort of scrambling for alternatives as to where do we run and hide. And I think that's a really distinctive aspect of this crisis, or of this moment, I should say, that that we have yet to come to grips with. And I'll point out that people who had, very serious voices that I speak with in the central banking and kind of policy community, who until a few weeks ago would have never entertained the idea of the dollar losing its reserve status, are now talking about it as a kind of serious possibility. So there's been a huge
Shift.
shift in mindset.
Okay. All right. I think the center of the hurricane is the bond market. And I'm not the only one who thinks so because this day right here, Pedro, was the day that Powell came in. Bonds were still selling off, even though the market was selling off to new lows at the same time. And they
Yeah.
said it was some trade. It was just forced liquidation of a basis
Yeah.
point trade. Do you believe that was the whole reason for this break?
I'm not sure. I mean, I think the data, from what I've read, the data that came out afterward did not quite bear that out. Uh,
Yeah,
and there was evidence of official, selling of holdings as well. So I think there was
okay.
a big mix of factors that I mean, the benign story that I've heard, and like, so I interviewed Tobias Adrian, who's a former New York Fed, markets desk guy who now works at the IMF. He releases the Global Financial Stability Report
Mhm.
during the IMF meetings a couple of weeks ago. And so his point was that we had, as you know all too well, given your neck of the woods, we had been in this hyper US exceptionalism trade that had just
Mhm.
supercharged dollar assets. And so you could see
Mhm.
this trade as kind of taking the edge off of that extreme. So that's the benign interpretation, but there's also the sense that there's been a loss of trust in terms of the US as a geopolitical ally and as a trade partner, and just as a reliable implementer of economic policies. I think it's more the way that these things have been rolled out rather than the policies themselves.
Yeah.
And so that concern about the reliability of the United States as the world's largest economy, I think is an important shift in how investors are preparing themselves for the
Good.
future.
When you say the uh, community, the trading community, the advisory community, are feel more after, especially after the sell-off of 20% in S&Ps and more in Nasdaq, more comfortable representing themselves as bondholders than stockholders, which implies that perhaps they missed a drawdown of the stock market sell-off. Do you hear a lot of people talking more doves about rates as far as where people think they're heading than people thinking they could head sharply higher?
Uh, I think that has been in terms of the market consensus or in
Yeah,
terms of policymakers. The
both.
market, so I would say there's a little bit of a divergence, and there has been this whole cycle. And so with the market participants, it's a little hard to discern what is their desire from what their preferred policy path. You know what I mean? Like
Yeah,
it's like they're begging for rate cuts. The market wants rate cuts. The market almost needs easier conditions in order to sustain kind of its levels in any way. And so for market participants, they've always gotten a little bit of ahead of their skis in terms of expecting the Fed to cut. In terms of the central banking community, there are a lot of really intelligent folks out there who, in the past, have been very dovish voices, who now are looking at this from a very different perspective, and who think that you just can't ignore the inflation side of the mandate when you're coming at it from, an inflation rate that was already stubborn before a tariff
right.
shock.
Yeah.
And you have this debate where Waller is talking about the possibility that they might have to cut rates when inflation is actually ticking up to 3-4%. And I just don't see Chair Powell as a kind of a lame duck chairman whose term is probably going to be over in less than a year, getting enough consensus around the table to cut rates in that environment. So therein lies the difficulty. And
And
then
you
you
know,
have the
Pedro,
go
go
ahead.
ahead. No, go
No,
ahead.
I think you have the issue, the political pressure that's been brought to bear on the Fed kind of makes
Yeah,
the job harder as well. I think Powell
yeah,
does see his institutional legacy as defending the Fed's independence
yeah,
from any attacks. And
yeah.
so that kind of further decreases his potential tendency to want to cut rates.
Okay.
And I don't think
And
that fight's going away, by the way. I think, people think that, the president backed off of Jay Powell, but he did so for now. But let's say that like inflation rises to 3.5 and Powell starts to intimate the possibility of rate hikes. Can you imagine what happens then?
yeah, or the market taking out the early April low,
Yeah.
and that there again, the president could say it's because always always a little late. Powell, is that his nickname?
It was too late. I think it was too late. If I could say
Too.
one more thing, actually, which I think is really important, you mentioned the bond market. I think
Yeah,
there's something really dangerous that just happened is there's been this whole talk about what the Trump put is and is, we used to think it was the stock market and Trump won.
right,
Now it's the bond market and Trump two.
right,
And so now the bond market has this renewed sense of confidence where it thinks it can control Donald Trump. I don't think anybody can control Donald Trump, to be honest. And so
right.
I think a dangerous illusion for the bond market to think that just because the 10-year yield breaks above a certain level, that the president is going to change his mind on policies that are near and dear to his heart.
That's a great point. And can you explain to me what the Treasury Secretary was talking about last week when he talked about a facility for the Treasury to come in and be bond buyers? I took it as, what are they worried about? I, you know, because,
No, yeah,
what do you think? I
I
mean,
don't know. We were wondering the same. We were wondering what exact facility he
I'll
means.
tell you what they're worried about: a straight line break, a panic low with only a 61.8% recovery, when I'm sure they threw a ton of ammunition at this market right here, and all they did was generate a bear market rally, and we're going to break down. And if I was the Treasury Secretary, they better defend this 85 level right here, 85. This was a test 85. You can't keep knocking it on the cellar door without falling into the cellar. So, I'm thinking one more attack at 85, and that measures underneath, Pedro, the October 23 lows.
Yeah. Well, there is this sense that there is this sense in the market that despite kind of lip service to deficit reduction, there's not going to
Yeah,
be much of it, right? And that the tax cut renewal is going to blow out the deficit in a very significant way. And so there's this weird kind of market echo about the possibility that a future Fed chair that is more acquiescent to Donald Trump would just come back and do QE again, right? Just to
yeah,
actively
okay,
finance the debt. So I
yeah,
think there is this underlying fear in the markets. One problem with that is that neither of the leading candidates for Fed chair would, from all that I know reporting on them for years, would be on board with that. In fact, I don't think they're either Chris Waller or Kevin Warsh is very big on the use of the balance sheet for stimulus purposes, and certainly not for financing the deficit. In fact,
yeah.
they want to go in the opposite direction. So it remains to be seen.
Austerity that Americans don't know the definition of.
Right, austerity at a time where we might be already under the cloud of an economic shock. So, right, so it could be
Yeah.
austerity at the wrong at a sort of pro-cyclical time, which is
I found interesting that part of you think of trade wars and negotiations, and you think of what's coming over on the big ships, the big container ships bringing goods to the U.S. I really didn't think about how a financial asset, like the Japanese are saying, that of course their $1 trillion holding of U.S. Treasuries is part of the trade negotiations.
yeah, isn't it amazing though? But it's one thing for it to be so implicitly. It's another thing for the finance ministers to state it publicly, right? That shows you the extent to which we probably have ticked them off because we have a pretty good relationship with Japan, and so
Yeah,
it was a very significant statement to hear,
yeah,
for sure.
yeah. So, biggest story of the next quarter, 90 days. My bet, I'm hearing things like China's ready to negotiate. I think they hold out through the whole 90-day period and without giving a deal to Trump, because they're going to let him fall on his sword. And I think by then we're going to start to have some empty shelves. What about you, Pedro?
I am concerned about that. I'm hearing about that possibility from people who are smarter than me and who understand global
Yeah,
supply chains better than I do, and including from people who like are on the ground, like
yeah,
the chief of the Port of LA talking about 35% decline in volumes, the kind of numbers that we heard during COVID, even though it's a different kind of
right,
shock. And
right.
so I'm definitely concerned about that. And so that's why it's so difficult to discern the inflationary shock from the disinflationary one and why they might have to coexist in a terrible way because if things go missing, the price is going to skyrocket, even if the economy is going to a rut.
Yeah, people are worried about um, only the price aspect of it, not thinking about the availability aspect of things. I mean, if I can't get simply watermelon juice because, they're not stocking it anymore, I don't know what I'll drink during the day.
Tell me about it. And to your point,
I've already noticed it at stores. They're already having stocking issues.
yeah, and prices are definitely going up. I'll give you an example. I bought a suit, and then the jacket was, buying suits online is never a great idea because it's not going to fit right. So jacket
Right.
was a little small. I had to buy the bigger size. I went to buy the bigger size. It was $50 more. Like
Yeah.
2 days later, and it was right after tariff day.
Oh,
And
oh,
so
okay. All right. Well,
we're definitely heading in that direction, and uh
yeah,
and it's a kind of a dangerous moment. So
yeah. All right. Well, thanks for helping us keep our heads about us. I think it's going to be real important to follow Pedro's writing and the other people at MNI, where you could really educate yourself about what's going on and with the demeanor uh, that's calm but resolute. I like your resolute as a combination of you being resolute about what you say, Pedro, and not being real emotional about saying it's almost like it's a matter of fact.
I
So
appreciate that. That comes with age. I was way more
yeah,
I was way more
don't don't
emotional about things in my
don't
youth, but I've learned
yeah
to control it.
yeah don't remind me. But anyway, I think the surprise is everyone's worried about a stock crash. I think they better be worried about uh, maybe the treasuries being the problem.
That's
I think
definitely the market that I would watch.
yeah, I mean, look, under this administration, maybe we'll have a default. There are other things that are going on. We could have, when they go to the last day to fund the government, that, these things it's possible that, everyone always says, oh, it's all theater. One time it may not be. And in this environment, they say in a bull market, everything that could go wrong doesn't, and in a bear market, anything that could go wrong does. So
And I
look,
find it so interesting that there's so much optimism still out there. The market's been kind of
yeah,
smacked around a few times, and it's still like, oh, but we're fine. We're bouncing right back. And to your point about trade deals, trade deals usually, I've heard this statistic over and over from people who negotiate these deals. They take at least 18 months or more to negotiate.
right,
90 days is nothing. So
yeah,
you might come up with a couple of random deals, but how much are they going to be, you know, worth
it's
their salt
impossible.
underneath? And how long are they going to hold, considering that, the first USMCA was signed under Trump 1 and it's been reneged upon just a few years later.
Yeah, so it's just another piece of paper until the mood changes.
Oh, I
Okay,
should
so
I should mention, if I could mention one thing, I don't want to hog
no,
the
go
mic
ahead.
here, but I did speak to Stephen Moran yesterday, the White House chair of Council of Economic Advisors.
Wow,
And and what was interesting is there's a fear in the market about, like, once they're done with tariffs, they're going to go to a Mar-a-Lago Accord, and then they're going to impose a user fee on treasuries, and they're going to extend maturities. I don't know if you saw that FT story that had a discussion between hedge fund managers and Moran that did not go very well, apparently.
yeah,
And
yeah,
but his point to me is that these musings that he wrote in a paper last year were just that, and that's not an explicit part of the Trump agenda, and people shouldn't interpret it as such. So I found that to be pretty interesting.
thank you for sharing that with our community and everything else you do, Pedro. Look forward to our discussions. I just want to show people before you go how they would, get to your site and
Yes, our
where they
new
could.
our new URL is mnimarkets.com.
Okay, I'm going to pull. So at the minimum, follow
Oh yeah,
Pedro on X.
I need to
Uh,
change the URL there because that's the old one, but it still goes there. So
okay, and here's MNI.
that's
It's a great resource. And are you under policy
Yeah,
or
that's it.
global?
Under
Yeah.
policy, that's us.
So under policy, you find Pedro.
Developed markets, and that's all our stuff.
Yeah. And I mean, they have a huge crew. They have a lot of people
But we
that
also
are
have a
covering.
strong paywall, so you got to pay up. But you can easily get a trial, and it's honestly a pretty. I'm not in sales, but it's a pretty amazing service, which includes not just our news coverage of of policy events in DC and all over the world, but also like on the market side, some really in-depth market analysis across asset classes. So
Okay. And if you're a youngster, boy, would it be great to get a job being a young person at an organization like this. It'd be like, getting a job at Barron's 21st Century.
that's exactly right. It's such a
Yeah,
cool place to work. It's such a
yeah,
positive environment. It's
yeah.
really, really cool.
Financial journalism at it's not the trading floor, but I guarantee you there's lots of trading of ideas there. So I'm not a
Exactly.
recruiter. I just was curious. So Pedro Da Costa, thanks so much for being here. We have to pay attention to the bond market. I do think, though, Pedro, I would like to see the market go through one more cleanse and take out the April low before it turns. That there is a chance in the second half of the year that we have a pretty strong market. I mean, this what has been a strong recovery from
Yeah,
that 4,800 level. But you know what people have to understand is the market isn't the economy. Not,
absolutely.
it's a financial asset that could be manipulated. That's what I've learned. It took me, I didn't believe the manipulated part to the extreme, but that's what it is. It's just another asset that could, have its value blown up to amazing heights or deflate to amazing lows.
And boy, are we
So,
seeing that in real time right now.
yeah, real estate, I think that's had it. I think, in fact, I know one of my sources believes that this housing crisis will be worse than '08.
Fascinating.
Yeah. So,
Phew.
we got a lot on our plate going forward here over the next 4 years, don't we? And it's also like the last, if you read the fourth turning, um, this turning completes into 2030. So, and I think it's a 20-year cycle. So we're entering the final stages of that. We're going to see a lot of history, Pedro. Um, I hope people believe in more than money going into this.
Well said.
Okay, so, um, I look forward to talking to you in the summer, buddy. Keep up the great work. You're a watchman for the FinTwit community? Because I know you mainly have institutional clients, but the retail guy, the guy that's trying to, navigate his way through markets, uh, you help them. Okay, so great mission. Pedro Da Costa, everyone, follow him on X at P Da Costa, and we'll see what his commentary is after Jay next week. Thank you, Pedro.
Thank you so much for having me, Dale, and thanks everybody for tuning in.
All right. Great. Thanks for giving all these years coming in here. And so that's a wrap. TGIF, we made it. Another one in the books. Um, I think we had a long USD yen bias, either against a dollar or in other pairs, yen pairs crosses. Had a pretty good week being long the dollar. And remember, this is just a bear market rally in the dollar in our view. I take what Pedro said. I concur. Um, the dollar's in trouble, but there'll be great entry. Be a nice short up there at 101.50, and then maybe another one later in the year at 105. But then after that, we correct this whole first wave down. Um, then we're talking about 80 if you're a dollar bear. Okay. So that's a wrap. Have a great weekend, everyone. I'll see you on Monday. Thanks again, Pedro.
Thank you.
Okay. See you guys, Simon, Adam. Yeah. Yeah. Okay. People are thanking you.
I
All right.
appreciate it.
So have a great weekend, everyone. I'll see you later. Adios.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.